Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are going over the hottest stock market news. So buckle up, smash that like button right now, subscribe if you are new for more videos just like this one, and with that being said, let's get right into it. Let's start off talking about the macroeconomic stock market, starting off with the NASDAQ and the S&P 500, which are up between 1 to 3% right now, which is very good. We also see the Dow Jones creeping up, which is good news. We saw some bond yields decrease. Bitcoin is up to $47,150, and Boeing, due to our news yesterday, is falling. But it's great to see how stocks recently surged as they shake off the rust from last week, because bonds and stocks did not have a good start to 2024, but it seems that the surge is now starting, which is phenomenal for stock investors. For individual stock news, we also see that Johnson & Johnson will have to pay $700 million in a settlement because they failed to warn customers about the health impacts of their talc-based baby powder. So this is a huge problem for Johnson & Johnson, and if you didn't know, Johnson & Johnson have to fight a plethora of legal claims on a regular basis, so we just have to add this to the list. But overall, Johnson & Johnson, in my opinion, is a phenomenal dividend stock to hold in your portfolio. Next, let's talk about Instacart and how they have created smart carts. And here's what I mean by that. Instacart is loading ads onto their quote-unquote smart carts. And essentially a smart cart is a regular grocery cart that has a screen on it to where you can check and ring up items and also check out all through a touchscreen that is attached to the cart. The reason why they're doing this is because this allows them to advertise to the person or people who are pushing the cart. And advertisers pay loads of money, and this is going to put more money and revenue in Instacart's pocket. We also see grocery chains like Kroger and ShopRite who are adopting this type of smart cart economy. And for me, I think this is a fantastic idea. It's essentially like a mobile self-checkout to where you could ring up items and check out your items all through the touchscreen on this smart cart, all while the actual company, mainly Instacart, is giving you and showing you ads that are relevant to where you are. We also see companies like General Mills, Del Monte Foods, and Dreyer's Ice Cream, which will be some of the first to advertise on these smart cards. And I think this is a phenomenal idea from Instacart because it's going to put more money in their pocket because advertisers pay big money. I also think this is good for the overall consumer, and here's why. Normally, people don't like to be advertised or marketed to. However, if I am in a grocery store, I'm clearly there to buy food or maybe some toiletries or other types of products like that. So I wouldn't mind being advertised to for those various products that I actually need at that time, instead of them just pushing ads that I don't need down my throat when I'm just surfing the web. And that's why traditional ad titans like Meta Platforms and Google, specifically Alphabet and YouTube, that is a big drawback for them. But we see a huge edge in regards to smart cart shopping. We also see other brands kind of adopting a similar business model to this, such as Uber, who launched their in-app ads back in 2022 to where they are on track to receive $1 billion worth of ad sales this year. We also see United Airlines, who is considering putting targeted ads on the backs of seats for their airplane. So literally when you're facing forward on an airplane, there's a seat in front of you, imagine a screen there, and then you can get ads through that. And I think that actually would be annoying for the overall person on the plane, but this will increase the revenue at United Airlines, Uber, and all of these other companies. So in essence, I think Instacart is very wise to do something like this, and I think their ads are going to be less annoying because you're literally there to get exactly what is being advertised to you. But I would love to hear your thoughts down below. In other singular stock news, we know that earnings are coming up. We are in earnings season for the fourth quarter, and we see that JP Morgan Chase, Bank of America, Citigroup, and Wells Fargo are all in line to report earnings on Friday. Some other companies that have already posted earnings would be Acuity Brands, Jefferies, and Neogen. For Jefferies, their shares declined by nearly 3% in the pre-market, while Acuity Brands increased their share price by 5.8%, and then Neogen shares tumbled by 9%. But let's return to the finance space for JP Morgan Chase, because this company actually got a recent upgrade. Deutsche Bank on Tuesday upgraded JP Morgan Chase from their original hold rating up to a buy rating. However, they did downgrade Wells Fargo from a buy rating down to a hold rating. And this is all because their fourth quarter earnings results, so please keep that in the back of your mind as we further infiltrate and integrate ourselves into the fourth quarter earnings season. However, there are a plethora of other companies that you need to keep on your watch list, which in my opinion would be companies like Amazon, Netflix, NRG Energy, Nvidia, Intel, and Meta Platforms. Those would be my top picks to look out for in this earnings season. Now, there are others on this list that I didn't mention. However, I just like to pick out my favorite companies on this list because I think they are going to have a very impressive earnings and revenue beat on their upcoming earnings report. So make sure to keep an eye out for those companies as well because it's going to do you a lot of good. We also see UiPath. If you're not familiar with this company already, UiPath is a leading vendor in the robotics processing automation space. So essentially, UiPath automates very repetitive processes. And according to their last quarter earnings report, they are exceptionally strong. The space itself, which would be the robotics processing automation space, is enjoying very strong adoption from the general market. And we even see third-party analysts are forecasting a compounding annual growth rate, also known as a CAGR, for the next several years of around 30%, which is literally our magic number here on this channel. If you can identify a company that is growing at a 30% CAGR or more, that company is rapidly growing and investors should pay attention. The company is also literally a market leader in this space and they are set to dominate in future years. So I am very excited about the future of this company and I'm excited to hear what you think about it as well. Moving along to our next story, we see a penny stock which is just trading at 58 cents per share named Stellus Life Sciences recently surged in their overall share price because their leukemia therapy got FDA fast track status, which is very good. This company is trading at around 58 cents per share, even though some analysts believe it could surge up to $4. So let's discuss what this company actually does and why investors are so excited about this penny stock, which recently surged. This company jumped by 5% in their share price, ticker symbol SLS, because this biopharmaceutical company received U.S. Food and Drug Administration fast track designation for its, quote, relapsed acute myeloid leukemia treatment, AML. Investors are really excited about this because there is a huge market for leukemia. As of the recent study, 8 out of the 9 patients enrolled in the 450 milligram cohort were alive, with a significant reduction in this overall problem. However, as they go on, they're anticipated to enroll others in a larger dose than 45 milligrams. They're going to kick that up to 60 milligrams, and this is anticipated to come in for the results in the first quarter of 2024, where they expect the 60 milligram cohort to be analyzed in the second quarter of 2024, just to see how good this treatment actually is, so that clearly should be on investors' radar. Next, we have Sabre and IAG expanding their partnership with a multi-year agreement. Sabre currently trades at $4.48, even though analysts believe it's worth anywhere between $4 on the low end and $9 on the high end. Sabre Corporation, ticker symbol SABR, entered into a multi-year distribution agreement with International Airlines Group, also known as IAG, and essentially this will expand their existing partnership and further promote modern travel retailing practices. Last but not least, let's talk about the most pressing stories, such as Match Group, ticker symbol MTCH, recently surged by 12%. And the reason for this is that the Wall Street Journal recently reported that an activist investor named Elliot had accumulated roughly $1 billion in this company, and he plans to discuss with the company various ideas on how they could optimize and fix the company to make them more effective and efficient. Next, let's talk about Urban Outfitters, ticker symbol URBN, which rose by 5% today. And the reason for this 5% surge is that the apparel retailer recently posted holiday sales, and the sales were very good and prominent, and that's why their share price increased. We also see that the Class A shares of Albertsons, ticker symbol ACI, added about 1% to their overall share price, and that's after this grocer delivered very impressive top and bottom line beats regarding their revenue and earnings. They also showed investors that their members are not only loyal, but they saw an increase in their overall membership. Lastly, we see Netflix shares slipping by almost 2% today because Citi analysts downgraded this streaming streaming giant's stock from a buy rating down to a neutral rating, which hurt their overall share price. Citigroup apparently sees three risk factors in regards to Netflix stock. They believe they will bring in lower revenues, higher cash content costs, and potential mergers and acquisitions. But as an investor, you should know that Citi kept their price target on Netflix stock at $500 and they only decreased their rating. And this would equate to around a 3.1% upside potential still left in Netflix stock, which currently trades for around $485 as of right now. So if you want more videos that will keep you informed on what's going on in the general stock market, go ahead and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.